to date, it's almost 30% up. We have a market in the past that used to be 50-50 international, 50% domestic. But because of the weak macro FX challenges, that figure fell to 4%, right? And the year before last, it was 11%, and then last year was 15%. So we're beginning to see the benefits of the reforms on the foreign portfolio investment in the country. And so, to your question around direct foreign direct investment in the country, I think the presentation that we saw from Mr. Chukwu clearly identified all the positives and the sectors that are growing. But I think we also need to talk about security because apart from the macro, apart from the policy reforms, I mean, security is a major concern. And I think that is one area that we really need to focus on. We can see the benefits of agriculture for us. I mean, food security is a matter of urgency for not just for Nigeria, but for most African countries. And we do have a very viable assistance in terms of Dangote fertilizers. I mean, if you haven't been to Dangote site, I think you should make an effort to go there. Don't rely on what you read. It's about 7 times Victoria Island. If you're fortunate enough to explore and just have a view of what has happened there, it will first of all make you to understand that truly as Africans we do have the capacity and we do have the ability to. And he has been talking about, in recent times, he has been talking about Africa rising and how Africa can actually position itself to become, they are in a position to be able to look after themselves. So I think security, I also think that more reforms, yes, the FX reforms, the harmonization of the exchange rate has helped, removal of subsidy has also equally helped. But I think we need to invest in education as well, because if you're talking about foreign direct investment, they need to work with, when they make those investments, they need to work with people. And we're not talking about just manual labor now, we're talking about skilled labor, we're talking about the AI era and technology. And so that area is one that I believe we need to take more steps to ensuring that we have the right people in the economy to be able to do that. But beyond that, this ability for returns is also very, very key. If you look at all the sectors that are thriving, you can see the food and beverage stands out clearly. And you can see also, even from the performance of the listed companies, they have done exceedingly well. So I think there's a lot of room for growth within the African context. And I think if we can just do these basic reforms one at a time, we should certainly see more direct inflow. Especially, I think Mr. Chukwu also touched on that. Volatility of exchange rate poses a concern for anyone, both domestically and internationally. So it's very important that we have some bit of stability. And one of the ways to guarantee that is to actually have more on the export side than on the import side as an economy, and that will help stabilize our economy and stabilize the exchange rate and attract more international investors into the country.
The insecurity is a clear challenge to any sector of the economy, not just tourism, not just agriculture. Of course, we've seen the impact of insecurity in the agricultural sector. We've seen farmers in the food belt of this country, that's Benue, Plateau, Taraba, displaced. In fact, as we speak today, if you look at food inflation in the country in the month of May, food inflation was highest in Benue. And Benue used to be the major point where we produce food and distribute this country. So clearly, insecurity is a challenge to food production. Insecurity is a challenge to tourism because the tourists must be comfortable that they will be safe. And that's why I think it was Jude that spoke on insecurity. So the issue of insecurity challenge becoming cannot be overemphasized. The government needs to do everything we have to. I mean, I was talking to somebody last week, and he said to me that when his in-laws came, in-laws are Europeans, that they drove to Yankari Game Reserve. And then went to spend, and those in-laws have been asking to come back and make another tour to Yankari Game Reserve. Clearly. So the government has to do a lot. So it's going to be, it's a drawback, it's a limiting factor. The insecurity in the country is a limiting factor to developing the tourism industry as well as a small agricultural sector.
There are huge opportunities for many businesses in Africa. And what would I tell an investor to look at? First and foremost, try and understand the political ideology of whatever country you're going to, the ruling class. And what do I mean? If you look at Nigeria today, and you look at us from the era of democracy, 1999, we've had various political ideology. But you'll find that in the periods where we had pro-market political ideology, Nigeria as a country where various sectors have thrived. But in periods where we have the statist economic view, those are the periods that there have been dissatisfaction in terms of various impacts on various sectors. So when I say to an investor who is going into any market, whether it's a small and medium enterprise investor, I will say to you, first you need to understand the political ideology of the ruling class. Secondly, political stability in those markets. And a critical factor is the long-term inflation rate. Now, when we decided to branch out to other African countries, one of the parameters we looked at is the long-term inflation rate. And why is it important? By looking at inflation, you will see the impact on various macroeconomic prices, whether it's the interest rate, whether it's the exchange rate. Now, when we decided to go into East Africa, what was the main driver? We look at those markets and we realize that the inflation rate was between 3 to 6% in terms of long-term inflation rate. If you look at Nigeria today, historically Nigeria used to be 12. But if you look at Nigeria today, we're looking at a high of 17, 18%. And it makes it difficult to invest. Why? You're having to contend with high interest rates, which is what we're seeing now, exchange volatility, which is now been tapered. So you find out that you have to go and diversify, which is what Johnson was talking about. Go into other markets whereby the prices, the interest rates, the exchange, there's more stability.
The first quarter of this year, the economy witnessed relative stability, on the back of the reforms. And that has had the effect of reducing our country risk and also reducing Nigerians' risk premium, if you understand what I mean. The risk premium is the difference between your yield, your sovereign bond yield, like the Euro bond yield, and the yield of the US Treasury 10-year bond. Today, the US Treasury, the 10-year bond is around 4.48%. And if you look at even the Euro bond that will be maturing in November, we have 1.1 billion Euro bond that mature in November. The yield has come down to as low as 5%, so meaning the price has gone up. So the risk premium has narrowed considerably, and that's on the back of what has happened. So you can say to a large extent again, confidence in the economy has largely improved. Just as has been observed too, the cost of borrowing is very high. NPR at 27.5% is still very high, and the IMF recent report is saying that the central bank MPC should continue to tighten monetary policy. If you read that report, that it should continue to tighten monetary policy in order to maintain a positive real interest rate. Okay, today inflation is at 22.9 and NPR at 27.5. So you have a positive real interest rate. So the IMF is saying maintain that positive real interest rate because that's what is attracting the investors. But again, locally, we know just as Johnson mentioned, it's becoming difficult, and he also mentioned it, Dr. Yusuf, the cost of borrowing. So for me, while it makes a lot of sense to have the Fisher effect, maintain positive real interest rate, it's also important to see how we can get SMEs access credit, through other means, maybe through our DFIs, strengthen our development finance institutions, the Bank of Industry, and so on, so that they can also lend to these SMEs, given the fact that the cost of borrowing is high.
We are not addressing enough the role of trade policy in fixing this economy. there is too much emphasis on FX, on interest rates, on FDI, on portfolio flows. But when we talk about the real economy, trade policy is extremely very critical because it affects the cost of inputs. So when you have a situation where the custom is under pressure to meet targets, revenue targets, and you have an economy where quite a number of the inputs you require to produce in the economy are also imported, those things create a lot of contradiction and it puts a lot of pressure on those who are in the real sector of the economy. So I think we need to look more critically at how we can deploy our trade policy instruments to be able to support the real sector of the economy so that they can cope with some of these headwinds that we are dealing with. And we need to be a lot more sensitive about the social context in which we manage the economy. It's extremely important because we are in an economy, we are dealing with people. So if there is such a high level of social discontent about the economy, we need to be very careful. We need to look at it critically and how we can take some deliberate policies outside the conventional, economic policy management framework to address these social concerns in terms of the economy. And finally, we need to be deliberate in looking at the incidence of market failure.
The lack of knowledge is ignorance, and if you don't have it, you're going to lose all your investment. So normally what I advise people, especially people that are new to the market, the company you want to invest in, they produce a product or they provide a service. How acceptable is that product? Is it a product that I cannot do without? A product that my neighbors cannot do without? That millions of Nigerians cannot do without? That tells you how strong. Or is it a service that people will have to consume? It's a must, whether you like it or not. So you take that into consideration. The next thing is you go into the management, the company. What are their raw materials? Where did they source those materials from? Is it something that they have to import or they source it locally? You analyze that. Where is the market that consumes their product and services? Is it local or is it foreign? I think you mentioned Okomu, you mentioned Presco. I think in the last 5 years, I've always been telling retail investors, the reason why the British or the Europeans came to Nigeria is because of crude oil. No, palm oil, not crude oil. That is why the likes of Okomu, because they produce a product that is not only consumed in Nigeria, but that they have to export it. So when Naira is devaluing, you expect the value of such a company to be going up. Now, by the time you're done with this, you need to talk to your investor, the advisors, because I've looked at these fundamentals, I've looked at this company. I don't want to, re-emphasize it, but corporate governance is also something that is, without corporate governance, even if the company's fundamentals are good, their numbers, people will use the back door to rob the investors of the value that is embedded or inherent in that company because somebody is not doing the right thing. So corporate governance is good, and empirical evidence has supported that. Once you have a corporate governance, a company will turn a liability into an asset and it will give a better return to investors.